Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, RBI has done it again. Now, we had news that AD Category 1 banks have been directed to close all their proprietary trading positions in the currency futures and options segment. Now, besides this, SEBI, that's the Securities Exchange Board of India, has also increased the collateral applicable to cover the initial and extreme loss margins for the dollar-rupee futures contract. Now, all these measures instill more fear in traders' minds rather than providing any comfort. Looking at the recent drastic steps taken by RBI, we seriously doubt that their various moves will actually manage to bring in any confidence in global investor sentiment here. Now, the Indian rupee will consolidate today, and we advise our traders to short sell the dollar-rupee pair at 60.12 levels in the spot. However, we maintain our medium-term view of further weakness in the Indian rupee versus the US dollar. So medium-term traders can look to accumulate at every dip. Now, the euro fell below the 1.30 level against the US dollar and hit a low of 1.2807 due to the better than expected US employment figures which came in last week. Now, we had predicted that the euro will break the 1.30 level against the US dollar in our previous report. Now, we have the all-important FOMC minutes due tomorrow along with a speech from Mr. Bernanke. And if he does not retreat from his hawkish stance, we can see the euro-dollar pair making a low of around 1.26. However, in case there is any change from his previous hawkish statements, then the euro-dollar pair will move back to the 1.30 to 1.31 levels. So a lot will depend on the news flow from the US Fed tomorrow. Now, besides this, we also have the Eurogroup meetings taking place. However, we do not read much into this. In rupee terms, traders can short sell the euro-rupee pair at around 77.80 levels. Now, we have the British trade balance and manufacturing production data due today. We expect the pound to move lower against the US dollar from its current level of 1.4962. However, there is a very strong support for the pound-dollar pair at 1.4850. And if it manages to break that support, then there is no stopping it from weakening further to around 1.4500 levels. Now, traders can sell the pound-rupee pair at around 89.98 levels. Now, the Japanese yen has been weakening steadily against the US dollar over the past couple of trading days. Now, after hitting a high of 99.89, the yen has moved lower to around 101.20 against the US dollar. Now, we expect further weakness in the yen-dollar pair, and it may move to 104 depending on the statements of Mr. Bernanke tomorrow. In rupee terms, traders can short sell the pair at around 59.80 levels. Well, with the increase in volatility in the dollar-rupee pair, we are in for some turbulent times, and we should learn to accept this. But we must also understand that this phenomenon is a global one and that is affecting markets and asset classes worldwide. With the RBI, SEBI, Indian government continuously intervening with what we see as very short-term measures for a potentially dangerous economic situation, we do not feel that anything that is genuinely concrete has been done to get back investor confidence in India. And we are not just speaking about FII or international investors here, even the domestic players seem to be losing faith. Well, that's it from the Currency Advisory Desk. Thank you.